Time now for an in-depth look at the market news this afternoon, and for that, I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you as always for making time.
Thank you for having me today.
So the S&P has decided to keep its sovereign credit rating for Korea at AA, a stable outlook for the economy as well. Tell us about that.
Yes, as you said, Standard & Poor's on Wednesday affirmed its AA sovereign credit rating for South Korea, despite the earlier slashing of its growth outlook for the Asia's fourth largest economy. If you look at the S&P's actions in the past, they have lowered the growth outlook for South Korea by 3 times already this year, from 2.6% in January to 2.4% in April, and then 2% in July. Continued to slashing the growth outlook to 1.8% last month. However, though, they have decided to keep the current rating at AA credit rating because of the outlook horizon. Korean economic growth rate should not decline further, but should be able to stabilize. They also said that this stable outlook reflects the expectation that geopolitical risk in the Korean Peninsula will not escalate to the point of hurting the Korean economic fundamentals over the next 2 years. So overall, the market reaction to this is pretty mild. Nothing really big in terms of the share price movement. Global equity market also did some correction yesterday. Accordingly, Korean market did kind of flat performance. As for the Kosdaq, was down about 0.5%.
Well, meanwhile, we've got this report saying that the so-called Phase 1 deal between the U.S. and China, which had been expected to be signed this month, might be pushed to next month. How's that affected the markets?
Yes, it did affect it negatively, but not that by much. Ever since the President Donald Trump said that he and President Xi Jinping would meet to sign a trade deal, the Wall Street had been hanging on the every speculative words about where and when the signing might take place. Everybody were expecting that this might happen in November, but now the Reuters are saying that it might be delayed till December. So that's why everybody seems to be concerned about the timing. But nevertheless, we think that both parties of U.S. and China wants to sign the deal. We just think that it will take a longer time. And also in terms of this trade negotiation, it's not something that can be done very quickly. It will be a long-term process, and it is only first phase agreement. So most likely before the end of this year, the signing will happen. Looking into the further longer-term basis, we think that any kind of trade agreement is positive news relative to what's been happening in the last several months. So therefore, equity market will take some additional booster once the first phase is signed.
Got it. And, we really have seen the markets going back and forth all the time, as you said, on this trade deal. What's your outlook for stocks in, say, the short to midterm?
Well, all it's concerned about is what's happening to the economic growth rate. And the recent Fed's 3 times rate cut was actually an insurance cut or is a continuation of cut because of the economy is slowing so fast that they need to boost the economy. Now, we think that, though, it is an insurance cut phase. In the last since 1987, we have seen 3 times of the insurance cuts. That happened in 1987, 1995, and 1998. And all 3 times they cut 75 basis point rate cut while they were actually raising interest rate over the long period of time. So this was those were the insurance cut. If this time around also 3 times cut by 75 basis point is an insurance cut, then we think the economy is not going to go to the recessionary territories. Rather, it should stabilize and then pick up again in the future. If that's the case, the equity market should do quite a nice run over the next 12 to 18 months by at least 2-digit growth rate over that period of time. And also the currency, the dollar, should strengthen after the insurance cut because the interest rate will no longer fall.
All right, Mr. Yu, we'll be watching that very closely. Thanks again for your insights.
Thank you very much.